Welcome to Engineering Influence, a podcast from the American Council of Engineering Companies. We are here today to talk about the newly released ACEC Research Institute 2024 Quarter 4 Engineering Business Sentiment Survey. It's a quarterly survey, as the name would imply, that kind of takes a look at current business conditions within the engineering industry and also takes a look at what might be around the bend by interviewing and surveying CEOs within our industry. Very pleased to be joined by Joe Bates, our researcher, who has been toiling away at this survey for God, how many quarters have you done this for now, Joe?
This was our 13th quarter, so we're just past the 3-year mark now.
Yeah, 3-year mark. So, I mean, this is a ton of data. Go to the ACEC Research Institute website, the www.acecresearchinstitute.org, and take a look at past surveys and get a historical view and read the Quarter 4 review for seeing what's ahead of us. So, Joe, let's, as we've done in the past, really the survey is a great piece of information for engineering firm executives to have for planning. Really, you take a look at current business conditions, you look at what's around the corner for future business conditions and some hot topics. So let's take a look at where we are right now. What does quarter 4 look like for the industry?
Yeah, quarter 4, Jeff, looks really good. We've been on a pretty solid run this year in terms of our current sentiment. So we ask 3 questions regarding current sentiment. One is about the overall U.S. economy. One is regarding the industry itself. And the third is regarding firm finances. And on all of these metrics, we're positive, as we have been. The overall U.S. economy, that metric has shown the most change over the last 3 years. And we're seeing a little bit of moderation. We kind of hit a high point back in the second quarter of this year, and we've dropped a few points since then. We use a net rating, and for those of you not familiar with it, we take the percent of positive responses, subtract the percent of negative responses. Those who are neutral, they're not included in the calculation because they're neutral. So we're trying to find, on balance, what percentage of the respondents are positive or negative. So in this case, we have a net rating of plus 36 for the U.S. economy. That's a very, very solid number. It's very good. As I said, it's down just a few points from earlier this year, but nothing to be concerned about. And then when we look at the industry and firm finances, we've been in the plus 80s for the last 3 years. There's just been a tremendous amount of positivity around the industry and firms. IIJA has certainly helped to buoy that. Coming back out of the COVID recession has also just been, phenomenally strong for our industry.
Yeah, it's really historically, since COVID, and even during COVID, there was still a good amount of optimism. It just seems as though that our industry is optimistic with the legislation that's in place, the fact that money is still being spent through the bipartisan infrastructure law, the fact that there are a lot of projects that are now hitting the point of going into construction phase. There are a lot of projects out there and of opportunity within the industry. But at the same time, it seems as though, and one of the hot topics really kind of goes towards hiring. Again, it really comes down to workforce. And what I notice is that there has been an uptick in firms that are actually turning down profitable work. Is that largely tied to the inability to fully staff those projects?
Yes, that's exactly right. We ask this question every so often. We've been asking it for the last 2 years now, whether your firm has turned down any work due to the lack of employees. We use the term turn down, but it could also be that you're not pursuing certain projects as well. And we do see that half of firms tell us they have turned down or are not actively pursuing projects they could be, and that among those half, over a quarter are turning down good, profitable projects. And that is a huge issue. We could be growing even more as an industry if we actually had enough people to do the work. 9 out of 10 firms are hiring. That has not changed in the last 3 years. The median number of openings is 5. That has not changed. And of course, it varies by firm size. So when you look at the percent, the number of open positions as a percentage of FTEs, we see that at 8% in the industry overall. Now, that's 1 percentage point lower than we've seen in the past. It had been 9%. So just a slight easing perhaps of maybe the demand side, firms may be slowing down just a tad, but there's such a lack of workers and firms are just dying to hire more people that I doubt many people really feel it.
Yeah, that has been a constant. The workforce shortage is something real. It's something that needs to be addressed. It's something that we're working on at ACEC with the Engineering Workforce Consortium. And for anyone out there listening in the new administration coming in, engineering workforce shortage is something that needs to be paid attention to, because we are at the crux of everything to, if you want to try to make America great again, you need to build, and to build you need engineers. So we definitely need to have those individuals out there in the marketplace. How is the workforce shortage and really other economic indicators affecting the future outlook for the industry?
I think it has a significant drag on the future. What we're seeing, actually, this was a bit surprising to me when we ask about future sentiment. We actually saw pretty significant declines in the fourth quarter compared to the third quarter. Now, I've had to caution people because it's could partially be a timing issue. This survey was conducted in early September. We had a few not so great jobs reports over the summer. We had not yet started cutting interest rates from the Federal Reserve. Inflation was sort of still a little bit stuck, but then later September and into October, the news got a lot better and the Federal Reserve started cutting interest rates, et cetera. So this decline that we've seen in future sentiment in the fourth quarter, we really have to wait and see what happens with the first quarter of next year. And of course, a lot can happen between now and then. As you've mentioned, we have a new administration coming in. So there's a lot of moving parts here right now.
How baked in do you think the political uncertainty, like you said, the survey was conducted in September, that was really when things started to change in the presidential race. How baked in do you think the political uncertainty is with how firm executives are looking at 2025 coming up?
Yeah, it's a huge part, Jeff. We ask those individuals who are not optimistic about the future why that is the case. And they tell us the number one reason is economic uncertainty, but no, the number two reason is political uncertainty. And that political uncertainty in the first and second quarter of this year was actually the number one biggest concern. So now it's number two. I imagine it's still going to stay at the top in the next quarter simply because there's a lot of unknowns about what will happen. So that is something that's fully baked into these numbers. The workforce shortage is baked in. The concern about inflation is definitely moderating. People are much, much less concerned about inflation at the moment, but they're not yet totally unconcerned about interest rates because there's still uncertainty there as to how far the Federal Reserve will go, how long they'll cut rates, and if we have renewed inflationary pressures because of certain policies that are made by the new administration, that could change everything next year. So there really is a lot of uncertainty, and I think that's reflected in some of these numbers.
That's an interesting point. The concern over inflation, I think, that is in the economy was, of course, the major driver, I think, in the election, as we're finding out more and more. But it's more of a question of interest rates and exactly where are they going to fall.
Yeah.
And exactly what's going to happen with the constitution of the Fed moving forward, and how is that going to drive rates, and what's the disposition of the Federal Reserve, in the new Trump administration.
Yeah.
A lot of uncertainty still out there.
Yeah, and the Powell Fed has shown us over the last few years that they are hesitant to raise rates, and they are easily persuaded to cut them a little bit before we might be fully out of the woods. So I think that has a dynamic that we're looking at as well. I think the GDP numbers are going to be pretty strong next year. I'm not too concerned about that at the moment, unless we have some kind of a major external shock. But I think the real concern is, if we have such strong growth numbers, or we have inflationary measures that are put in place, such as tariffs, that could be a big concern next year.
Yeah, absolutely. And we'll see the effect of that in the next survey done in Q1.
Yeah.
Looking at market sectors, have you seen any big shifts in market sectors of interest by the industry? What are the hot topics or hot industries, and which are the ones that are showing some softening?
Yeah, we definitely have what we call winners and losers. That's kind of our shorthand for talking about sectors. The sectors that are doing the best and have been performing the best in terms of sentiment, as well as in reality, for the last few years, are those supported by the government programs such as the IIJA, the CHIPS Act, etc. And so what we're seeing are roads and bridges, infrastructure, transportation at airports. All of the transportation elements are doing very well. Water and wastewater is also doing very well. We're seeing manufacturing doing well also, and that's very much a part of onshoring the last few years. So we continue to see that as being a growth sector as well. So those are the positives. On the negative side, we're really seeing a drag in the commercial real estate industry. That just is not doing very well right now. It has not done well since the pandemic, but there's some indications it could do even worse in the next year. On the residential side, it's not done so well the last couple years, but depending on what happens with interest rates, that could boost the production of single family homes. So there are definitely some positives, but some cautionary areas as well. Yeah,
commercial real estate has really been, and it just has not recovered. Since the pandemic. It would be good to see housing starts grow on data centers and other critical infrastructure for the tech industry, for a lot of support function for industry. How's that looking?
Data centers are going gangbusters. They have been doing very, very well since we started this survey, but even better the last year or two. And the future sentiment is extremely high for data centers as well. If you live in an area such as the DC metro area where I live, you can't drive down the interstate without seeing a brand new data center being put up every month. So it's pretty solid right there for sure.
Fantastic. It's hard. It's like a data center wonderland when you get outside of DC, out west and past Reston. They keep on building.
Yeah, it's truly amazing. When you're taking off in an airplane from Dulles Airport, if you look down, you can really see it. It's pretty crazy.
Yeah, absolutely. So this is kind of scratching the surface here of the report. I really do encourage everyone to go up online to download this and dig into the numbers and look again at past reports, because with 13 quarters now you're in the area of trends, right? So that's another thing to kind of point out, is the fact that you now, with so much data under your belt, you can now look at trend data and you can start doing some serious forecasting.
And Jeff, there's one other thing that we're currently working on with this data, And I hope that we'll be able to publish this in the next month or two. What we've done is, now that we have a good time series of data, we've gone back and looked at economic indicators. We did this about a year or so ago and found some very positive correlations. But now that we have even more data, we've expanded the number of economic indicators we're looking at. So we're seeing correlations of our data as a leading indicator by 1 or 2, in some cases 3/4 of things such as GDP, employment, housing starts. So that is something that we're going to come out with, I hope, in the next month or two. And it's going to have a lot of really rich data that I think will be even more helpful, because then you can say, if we see an increase in this measure in the sentiment index, we can expect an improvement in various economic metrics in the next quarter or two. So I think that's going to be some really powerful data that we'll have to share soon.
Yeah, without question. And I mean, there's so much else going on with the Institute. It's just not the economic reports. You're also working on the diversity roadmap with Light Group. You're working on the Firm of the Future project, of what the engineering firm of 2035 is going to look like. You just released your achievement report for fiscal year 23-24. There's a wealth of information here. The Institute started out just kind of doing a couple of studies and establishing itself during COVID, and now it's just really exploded to become really a very strong source for hard data, numbers, economic trend analysis for the engineering industry. And Joe, it's your research has been fantastic. So I appreciate you taking time today to go through the sentiment report, and look forward to having you back on to talk about that trend data, and also look forward to Q1 25.
Great. Thanks, Jeff. It's always a pleasure to be with you.
Fantastic. And again, if you like this episode, please click like and subscribe down at the bottom there. You know what to do. Good old YouTube. We got to beat the algorithm, get some eyes on the content. So please join us in liking and subscribing. And again, this has been Engineering Influence podcast from the American Council of Engineering Companies. We'll see you next time.